Hello traders, Light Forex trading community. It's great to be back. I'm Cuzin, giving you my top level market analytics and trading sessions. Today I want to go back to the crypto market. I think it's about time. Last time we touched base, it was roughly a month ago, and I suggested that we're not out of the danger zone yet. Now I want to follow up on that. I want to give you my insights and also share with you my personal trading activities with regards to the crypto market. We're going to touch base on the Ethereum, the Bitcoin, and the Litecoin. So it's going to be super interesting. Sit back, relax, and let's hit it. Alright, so we're going to start with the Bitcoin, right? All I can say at this point is following up on our last session a month ago when I suggested that it's still dangerous out there. We're still not out of the the bear market officially, but we do have some positive signs, and that's pretty much the main theme for this session, right? Because we see some evidence of the market maybe bottoming out. The best evidence we see coming from the Litecoin. So I'm going to save it for last, right? But I'm going to start with the Bitcoin, and later on we'll move to the Ethereum. The Ethereum and the Bitcoin presents pretty similar technical situation, right? Where they have been starting to trade sideways for quite some time. I mean, we can see the Bitcoin here, right? Ever since late November 2018, so we're talking about 3 months, right? Price had started to trade horizontally, right? Started to trade sideways in a very tight trading range. Now, this may actually be the very process of the market bottoming out. It's still too early to determine, right? Which is why I'm still careful. I actually take action here based on the short-term perspective. So what I'm doing here at the moment is kind of playing out that trading range. So whenever price reach the lower section here in my symmetric setup, I just establish a small position and try to take it to the higher section again, and vice versa. Now I'm holding a relatively small position on the Bitcoin. I actually got it a little bit bigger today because it goes according to plan. So price went down, touched base on the very low, the very bottom key level here, 34.44. Right, that's the setup that I was, that's the trading range that I was talking about earlier, ever since late November. Right, so I was able to pinpoint that movement with that black system here. So the 34.44 was kind of the last line of resort, right, last line of defense, and we saw price kind of violating. Breaking a little bit below that key level when we were looking at the daily chart. But if you take it to the monthly chart, that's quite interesting to see. You can see that the level was actually holding very well, right? 34.44, take a look. There was no close below that key level. Actually, we see the reaction 2 months ago with that spike here. Last month also touching base on that key level, and this month an upside reversal. So this setup is very much valid, right? So right now we're pretty much at the very middle of the range, right? So we passed an important obstacle. That was the previous resistance, 38.39, right? The mid-low key level right here. It got broken pretty decisively, and price is climbing slowly but surely towards the higher section. Now, when I said that we're still not out of the woods, I still cannot determine with confidence that we are indeed bottoming out and we're getting prepared, so to speak, to the next, bull market, right? I would like to say that that's the case, but I think it's too soon. But I will give you some guidelines, especially when it comes to the Bitcoin here. So I'm pretty confident that price will make it to the higher section, right? And I actually put my money where my mouth is. I have a position in place. But when price reach 42.82, right, which is the mid-high key level, that could be a stiff resistance. So I plan to either pull out completely or close most of the position, take profit and wait some, wait a little bit on the sideline kind of, and see the reaction we're gonna have on that key level. I actually think price will, there's a good chance that price will bottom out. I'm talking about the big trend right now, right? The big bear market. But it would only be certain, well, to a certain degree, once price makes it above the top key level right here. 46.77, 46.78, right? That's the last line of resistance, engulfing this trading range, which might be the very process of the market bottoming out. But if it will break above that key level, that's going to be a very important event. And I would actually might readjust my long-term perspective on the market, right? I might actually establish a long-term bullish position. So these are I think these are the most important guidelines we should be watching, right? Bitcoin right now is going up, but it's still part of a short-term type of move right now, at least until we can set free out of this limiting black system. All right, so that's the case with the Bitcoin. I've just reinforced my position here. It looks like it's gonna hit that higher section. So yeah, it's interesting stuff. Now, the reason I increased my position here was also because I closed out a bullish position I held for probably about 5 days on the Ethereum, because the Ethereum, a little bit differently than what we see here, actually made it to the higher section, right? So I think the Bitcoin is dragging behind the Ethereum. But if the Ethereum hit my price target, my mid-high key level, and this is still in the middle of its way, I thought it's going to be wiser to take profit on the Ethereum because it did made it to my price target, and shift my funds to the Bitcoin. Let me show you the Ethereum. It's quite interesting. So also, like I said, very similar technical picture with even the same amount of legs. Also, I would say almost the same time starting to develop. Actually, the Ethereum started a little bit later, like 2 or 3 weeks later. But still the same amount of legs, right? We have the first leg here, second leg up, third leg down. But it was much more respective to the setup than the Bitcoin. No violations here, guys, even not coming from the daily chart. Take a look. Beautiful, really smooth touchdowns here on that 103.54, and price began to turn around. That was an important moment. When price began to shoot up, I knew that we were looking at the next upside leg, and I was still looking at this from a short-term perspective, just as I did with the Bitcoin. So I engaged with a bullish position, and later on, when price broke above the 125.80, which was my main concern as a resistance, local resistance, I actually pushed and reinforced my position significantly. All the time aiming at one particular key level, which was my main price target, 150.68, right? So that got taken 2 days ago. Actually, 3 days ago, we got really, really close to that key level, but it missed by just a fraction of a point. The next day, take a look at that spike, boom. It took the price target, the mid-high key level, 150.68. At that point, I was out, but I have to say, I don't think that price is going to reverse. I actually think it's going to continue and drill through that 150.68 and take it to the higher section. Having said that, according to the principles of the symmetrics, this is the danger zone, right? Everything from 150.68 and above is the risky part of that stretch, right? The safest part was up until 150.68. From this point on, it's going to be a little more risky, even though I do believe that price will make it I think it will make it to the previous high just because of the nature of the low that we just came from, right? So I think it's going to take the previous high around 160, 170. But like I said, at this point, the level of risk is just outweighs the level of reward. So when I compare these two setups, right, the Bitcoin and the Ethereum, it was a no-brainer. I could easily see that the Bitcoin is in the middle of its way. The Ethereum just reached basically its target. So it was it was obvious to me that I'm going to shift my funds from the Ethereum to the Bitcoin. Interesting situation. Now, pretty much the same with the Bitcoin. If this is going to break above 172.94, right, the top key level, the last line of resistance in this setup, this trading range, that may be representing the bottoming out of the Ethereum, right? Because we came from, very, very high levels, right? 1400. We are at 160. This was, probably a 95% drop in value. So we're very, very low. But this may actually be the end, right, of this bear market. Still too early to determine. But if price will break above 172.94, in accordance with the Bitcoin breaking its top key level, right, it should be synchronized, then that's going to be a good sign. Long-term perspective, that's going to be a good sign. So let me take you to the Litecoin. I think the Litecoin is gives us probably the best indication that we may be beginning the next bull market. Let's take a look at the Litecoin. By the way, I have the biggest position I have is actually on the Litecoin, and I'm gonna share with you the reasons for that. Now, we don't have here a trading range, right? Not always we have a trading range that I can work with, the C matrix and so forth. Sometimes we don't have that, obviously. What we do have here is more simple, more simplistic type of, technical picture. We had a head and shoulders pattern right at the bottom, an inverse head and shoulders pattern, which I highly respect, right? Especially if it's the right head and shoulders pattern. So we had a pretty nice one here. Take a look. That was the left shoulder, head, right shoulder, and it broke. However, it wasn't a smooth ride, right? It was a bumpy ride, actually. And it was quite surprising to me to see that price, after landing precisely on the 1.236 of the head, right, Fibonacci projection, went back and actually crossed back below the neckline. That was a bit weird. And I lost confidence, actually, on the Litecoin at that point. I was out with the 1.236. When I noticed that it was spiking that key level and beginning to turn around, I got out quickly. But I wanted to come back in when I saw price break below the neckline. I thought no chance, right? And I was waiting on the sideline and I saw price just keeps flirting with that neckline from below. And I was pretty convinced it's going to crash. But I kind of knew that, the neckline is a very weak technical element, far weaker than, the C matrix key levels, or Fibonacci projection levels, or even the 200-day moving average. All of them are stronger in terms of technical validity. The neckline, we should take it with a grain of salt. I always keep that in mind. So I wasn't completely desperate with the situation of the Litecoin kind of, trading below that neckline. But it was a bit strange, right? I don't remember too many cases where that happened. But a few days later, it did drag for about 2 weeks or so. Later on, it just broke back up. It just broke that neckline as if nothing had happened. And it actually based itself on the neckline. You can actually see that. It's quite interesting. Take a look. Right here, right? So the neckline was like a it was changing its nature left and right. It started as a resistance, later on support, resistance again, and back to support, right? So price, after a few days of making sure that the neckline had turned into a solid support, it just exploded. Straight up, boom. I was lucky enough to have a small position. Unfortunately, I mean, you know, I could have had a bigger position. I was still a little bit, you know, uncomfortable with the whole technical picture here. I did have a small position in place, and all I knew was that I'm going to take it now to the next projection level, right? If I worked with the first one, 1.236, and now we're about to go higher, it has to be the next one. It has to be the 1.618. Now the 1.618 is right here, guys, the green dotted line at 45.4, right? It just happens to be amazingly in line with the mid-high key level of this system here. Now I did say that there is no trading range. I was talking about the big picture, right? Obviously there is a trading range coming from the very local price action. That's actually a 4-hour setup, right? It's a 4-hour setup that I look at from the daily perspective, but it is a 4-hour setup, so it's an intraday setup. It's just, you know, it's a sideways movement had started right as price hit that 1.618 at 45.41. But it's interesting to see how they fall right one on top of the other. The mid-high key level here is 45.43, by the way. So price began to trade sideways here in a very local fashion, right? And I was not sure whether to close all of my position or, you know, or to keep some of it for the potential of, you know, continuation of this movement. So I did close about 50% of the position. And when I noticed that trading range starting to form, I knew that my last line of resort, as far as keeping my holdings on the Litecoin, is going to be 40.32, right? The bottom key level here. You know, fortunately, that level was not engaged with, right? It wasn't even challenged. Price just kept trading sideways, and at some point, just a couple of days ago, actually 4 days ago, it broke up in a nice, strong upside move. And it broke above the 47.85, which is the top key level here, the last resistance, right, in that local setup. And that was good. That was good news. But, you know, it was just a daily break. A daily break is usually unconfirmed, and it could be noisy. So I got a little bit scared. I actually got a little bit concerned yesterday when I saw price begin to fall back. And take a look. At some point here, it actually started to trade below 47.85. And at that point, I thought to myself, maybe that was a false breakout. And price is actually going to end up the weekly session, right? It's going to close the weekly bar below 47.85, leaving just a little bit of a spike there. And that's not going to be good. That's actually going to be a very negative sign that we're going to, well, that's going to be a sign that we're going to have another downside leg. And I wasn't really sure I wanted to stay and absorb that move, because it could also be, you know, the last leg that could break down completely. So I was kind of contemplating whether to take it out, as price was trading a little bit below 47.85. I'm talking about yesterday, right? Just yesterday. But then, of course, I noticed the 200 daily moving average also, right? So it's quite interesting, the coincidence, so to speak, of the encounter between the 200 daily moving average and the 47.85, right? Symmetrics level with the 200 daily moving average. I always like to see them collide, because that you know, it's very simple. It just makes that key level much stronger, right? It enhances, in this case, the supportive element of that key level. So so I thought to myself, all right, I'm going to stay put and see whether this combination, we can call it a cluster between the 200-day moving average and that top key level, is going to hold, right? And you know what? It didn't took too much to see that it actually did hold, and it held beautifully as price began to hammer and move strongly to the upside. So that was an important moment, right? The 47.85 here seems to be an important pivotal point, right? The point of no return. This is why I told you at the beginning that I think the Litecoin is the best evidence that the market is indeed turning around finally after more than a year, right? More than a year. So the Litecoin is actually gone far. It's not about trading range. It's not about sideways movement. It's proper upside trend. Having said that, it's still early stages, even for the Litecoin itself. I will like to see price reach my price target. Now take a look. Since we can't fully determine that, the bull market had begun, I have to take it a step at a time, right? I have to focus on the short term. Now the short term right now has to be the next Fibonacci projection level. That's the next important one. So after the 1.236, we had the 1.618. Now we're having the 2.618. All right. Bear in mind, I always talk about the head, right? From top of the left shoulder to the tip of the head. So the 2.618 is 59.6, right? That's where my price target is, and I plan to get out completely, unless I'll have a lot of confidence coming from different areas of the market. By the way, I'll do cross analyzing that we're about to be involved with a long bullish trend, right? But I'm really going to focus on that 59.6, which is the 2.618 of the head, right? Fibonacci projection level. And once we hit that key level, I'm going to reanalyze the big picture again, right? So we still have quite a move ahead of us, like 8 points to go. And it looks pretty good. It looks pretty good from this angle, anyway. Yeah, it's going to be interesting to see how things will unfold here on the Litecoin and the rest of the coins, guys. I hope you enjoyed this session. I think we came to a resolution when it comes to the analysis. Till next time, be well.